Welcome to another AriasWave update. So this is the first update for May 2022, and I want to start off with the 10-year bond yields and just recap on some price action that's happening here. So as I've mentioned in one of my previous videos, this move since 1981 to the downside most likely is a wave D. I did make a video about the long-term pattern. But either way, in this case, regardless of that, it's we're basically looking for a reversal here. In terms of the C wave of the D wave, we had the 5 waves down, and now we've broken out of that channel for the 5 waves. The first confirmation will come at a break of the wave 4. So that'll be secondary confirmation after we broke out the channel, and the next confirmation level will come likely at around 6.8. That'll break the start of wave C. So that would be the next target, but I do believe that this is probably going to be moving higher. At this point, I'm probably thinking above the previous high of 1981, but I'm not entirely sure how high this could go. It depends. Whatever happens after that, it will likely send this market into the negative territory. But first, we need to see how this unfolds and how long it will take, etc. We don't know at this point. We're just looking for 5 waves up, and depending on what kind of 5 wave move we see, it could be a sharp one. Moves to the upside in bond yields tend to be sharp if you look back through the history of bond yields. So just keep that one in mind. So that leads me to just show you the latest analysis on the Dow Jones. So this is another interpretation that I have on the Dow Jones. So this is a bit of a much more long-term chart. All right, so taking a close look at this, I have actually changed the analysis for wave 4. This long-term pattern, I believe it's a wave, the end of wave 1 of a wave 3. So the whole structure started in roughly around the 1500 mark, like the year 1500. It created a wave 1, 2, and then it created a leading pattern, in this case, it's a type 2 week 5 wave move. I know it doesn't seem like it, but this is a long-term pattern. And the reason I call it week 5 wave move is because of the way that waves 1, 2, and 3, waves 1, 3, and 5 are zigzags, right? So I don't have the chart data on here, but if you take a look at one of my YouTube videos, you might be able to see the previous chart data on a different chart that connects, some previous markets to the US markets. From what I can tell, the Great Depression was an expanded type 2 zigzag. So wave A and then B, very small C followed by a D, and 87 crash ended that correction that started in 1929. So wave 4, I do believe, ended in 1987. So quite a long correction there. So therefore, the last move had to be a zigzag, which I believe this is. All right, this complete move up is a zigzag. Now, being the end of wave 4, typically a market will, after a complete 5 waves moves up, 5 wave move up, it'll start off with the A wave for a long-term correction. Well, when I say long-term, it's expected to go back to the 4th wave area. Now, whether or not that is anywhere below the 1987 area, obviously is yet to be seen, but regardless of how low it goes, even if it goes down that low, it would still be 95%. Okay, so if you go down any lower than that, I mean, it's just 5% in total. So, obviously it's not a good thing, but we need to see 3 waves down to begin the correction, right? Now, after this 3-wave down happens, we don't know how this market is going to continue. It might expand to the upside again and continue on an upward trajectory, or it might stagnate and go sideways for a bit, for quite a while. Now, obviously, this is just an estimate based on some symmetry. Now, obviously, the move down could either happen really sharp. I mean, we all know that markets go down faster than when they go up. Right? Like when they go up, it's like taking the staircase. When they go down, it's like taking an express elevator. Right now, a couple of things about this wave 5 zigzag is so the first part of the zigzag was just a straight 5-wave move, and then the second part of it after the 2009 GFC was another type 1 weak 5-wave move, which can be thought of as an ending diagonal pattern. The only thing is these patterns, they're all basically the same when it comes to how they look. There's basically waves. Wave 1 goes up in 3 waves. In this case, wave 2 was short and sharp, but I'll get closer in a second to show you that. I just wanted to show you the long-term view for what the minimum expectation for a correction is going to be after this kind of move. All right, so I'll head over to the US 30 chart so we can just zoom into that, sort of get a bit of a closer look on this one. Okay, so basically here we have, in my opinion, what I believe is a zigzag for wave 1, which ended. So basically you got your A, and then B expanded, and then you got C, right? And then you had a very small wave 2, right? So this wave 2 was very small, which is why wave 4 was deeper and longer. So you can see that there's another zigzag that happens here. And then wave 5 is also a type 2 expanded zigzag. Now, the wave 3 zigzag did not expand. Not that I can tell. It might have expanded a little, but not that much. Potentially, it might have. But once again, I'd have to pull that apart, which is beyond the scope of this video. I think it might be a little expanded, probably greatly, but it's just a common theme across all the zigzags in this market. They do tend to get expanded just due to how fast it's growing in general over time. Anyway, so moving sort of closer to now, I put the waves. I did a 2-4 channel, right? You can see the 2-4 channel here. It's basically we had some some overthrow, right, and basically some throw over, where wave 5 went outside of the channel and then has come back into the channel now. So I'll just zoom into that area now on the last wave here. So I did call that to be the top due to the break of that particular level here back in, well, when it broke, it was basically January this year. And then I basically took a pause for a while just to wait for this price action to unfold, and also take a good look and reassess the waves long term across different markets. So I've gone ahead and labeled what I believe to be the start of this move down, right? So if we go to the 4-hour chart, okay, you can see that I've put there waves 1 and 2. So ultimately, if this is correct, then this is a critical support area. And depending on if this is correct, because I mean, you can see that the waves have started to get sharper after this particular spot here, which is, I believe, is the end of wave 2. And you've had a wave 1 followed by a wave 2, which I believe ended at the Fed meeting. And we've also broken a key level down in there, which confirms that this move is wave 2 is complete for the beginning of this next move. But the real confirmation will come when we break this level here one more time with 32,000 level. If we break that, I think that we're going to start to see this thing get sharper to the downside. So it's basically just the beginning. As they say, markets, take time to turn around. It's like when you're driving a car. When you approach the corner, usually you slow down to take the corner, and then you accelerate. So same like with markets. Once the momentum sort of slows down, you get this reversal. So we did close back underneath inside that channel again. So to me, that's an interesting sign that potentially lower prices are on the way. Now, I'll quickly head over to the euro. Now, as you know, I've been tracking this particular market for a while, and my latest analysis on this one is just a matter of keeping it very simple. This pattern, this corrective pattern appears to have started around 1980s, 85, I think, potentially, and it's just basically been producing this ABCDE pattern, which has just been confirmed as broken. So we have a reversal here underway now, and we can expect this to keep falling lower over the coming weeks and months. And the minimum expectation for the drop will be about 62 cents minimum expectation, right? Once we get down there, we'll have more of an idea, but it has to go below that level due to the way that the waves work. If this is any kind of movement, doesn't matter whether it's a wave B or wave 2 or wave 4, regardless, there has to be a new low made below the corrective waves. So if you want to learn AriasWave, go ahead and head over to the website. You should be able to find those details on the profile. Okay, so basically that's telling me that we're going to see some crisis begin from here. This type of move doesn't happen every day, and it should basically be another symptom of what's going on in the economy. If we go to Bitcoin now, if you understand, I suppose, the Dow Jones pattern, to me, this particular pattern, this one here is not correct. Okay, this was an old analysis. I've been using the BLX chart for my latest analysis. And to me, this is definitely sort of, well, I can't say definitely, but it's been sort of going up alongside the Dow Jones. So it's just been very interesting how it's sort of gone up during the same period of time as the Dow Jones has since, 2008, all right, for that final leg up. So to me, probably not proving very popular, but I do believe there is some further downside for this. And depending, to be honest with you, the same pattern must occur here as the Dow Jones, which will be a larger wave A. Okay. Now, I'm not 100% sure where this will go, but if we're just going to be, how can I put it, conservative, right? We need to go back to the previous wave 4. Okay. So the previous wave 4 is the low of December 2018, right? Minimum expectation for this fall should be around that area, even though we're going to see potentially worse problems in the markets. So to me, it'll just be very interesting to see what happens here. I'm not going to be investing in any cryptos at all until I see what kind of pattern unfolds at this point. So after we see something like this happen, I know that's going to be pretty deep, but we don't really know at this point whether or not this will be the floor. So to me, according to AriasWave, because AriasWave it is its own methodology. This is my opinion only. I'm not a financial advisor, right? You go ahead and do as you wish, as you always do. For me, this is just the AriasWave interpretation of this market. It makes a lot of sense because it's in line with the Dow Jones analysis, and it does indicate that a top is in place for at least for the first major 5 waves up for this market. Okay, so at this point in time, in terms of where I think the correction is at, I do believe that we are right about to see another drop. So if I had to put in some labels here, I would probably put them in like this. So I'd probably say that that's a wave 1, and from what I saw before, I think it was around wave 2 ended around here. So I can't really zoom in too much on this one, but I'll try and zoom in a little bit so I can sort of show you that spot. Now I think it was around there. So I do believe it was around the 28th of April that this sort of area became important. Very interesting little area for a correction to end as well, and that's based on a small wave E having occurred. Unless that level is broken, I'm going to assume that that is the end of wave 2, and we're probably going to be starting to see a wave 3 down now, which is going to take these prices much lower and sort of help confirm a break of the previous wave 4, which I do believe is at the last low in June. So 21st, 22nd of June, 2021. That'll sort of, add a bit more confirmation to that idea. Whether or not that's true, we're going to have to wait and see. But obviously, we've been on a downward trajectory since I did call the top around this area, having explained my reasoning. I previously did think this was like an A, B, and now C pattern, but I now believe that it's just a complete 5-wave move. And any move from here will be the first part of the first part of a zigzag in 5 waves. So it'll be wave A of wave A in brackets for a zigzag. So I don't think it's going to happen too quickly, right? Corrections typically don't happen that quickly. So, what would I expect to see here potentially? Well, I would say we'd have to see some kind of 5-wave move to the downside, 5 waves, and then a correction, and then 5 waves, something like that. Usually, you get a bit of symmetry happening with these kind of moves. Potentially, head and shoulder type patterns. But once again, that doesn't mean that there's going to be further downside. We just don't know as yet. So we just have to keep an eye on this. All I know is that for now, it's looking like a bear market is probably going to remain in place for quite a while. So thank you for watching, and I'll catch you in the next video.